All right, I'm going to take a look at silver today. Silver has been locked in this coil, it's a volatility coil, for about a little over a week. Now, generally, when these coils break, they break aggressively. The move can be um, pretty powerful. About 70% of the time, the initial move out of a coil tends to be the wrong direction, and then price reverses, and you get a much more powerful and more importantly, more durable move in the opposite direction. I think this is going to be one of those 30% of the times where the breakout is sustained, at least for a bit anyway. I still think that gold is probably moving down into its 8-year cycle low, so I expect intermediate rallies will probably not make higher highs. So don't fall in love with the trade. So as of today, anyway, it looks like, of course, we have to see what the end of the day was because it looked like it was ready to break out here as well, but then came right back down into the coil. But anyway, we've got the opportunity, I'll put it that way, to break out of this coil today, and uh, and I think the chances are better today than they were here, and I'll show you why. All right, I think I showed this chart in my last video as well. This is a major resistance zone for the dollar at about, let's call it 94.70, and the dollar finally tagged that and, and is reversing back down today. So there's a pretty good chance that we're going to get our intermediate top in the dollar cycle right here. And then we'll get an intermediate decline. But as I've noted in my previous video, this intermediate cycle is extremely right translated. That means that the odds are not good that this intermediate decline, when it occurs, will drop below this and change this to a declining market. Right now, this is the 3-year cycle low right here. We're still advancing out of that 3-year cycle low. The advance has been pretty mediocre, typically not the kind of advance you would see if the dollar was in a long-term secular bull market, but it's in a cyclical bull market as it comes out of this 3-year cycle low. So you can see that this intermediate decline did not drop below that one. That confirmed that this is the 3-year cycle low. And then we've got another strongly right translated intermediate cycle that did make a higher high. It did go above this peak, and it's more than likely it's going to run into resistance right here, and then we get an intermediate decline, but it probably will not, probably won't even come close to taking out this. And because this is extremely right translated, the decline is probably not going to last too long. So it may only last 3 to 5 weeks. And then you'll start the advancing phase of another intermediate cycle. And most of the time in a secular bear market, the move out of a 3-year cycle low usually only lasts about a year. So you can see we get our bottom right here at the beginning of the year. So I would expect the dollar probably won't rally much past January of next year before we start the declining phase of this 3-year cycle. Maybe at most, the rally might last into the summer of 2022. So that's kind of why I think the 8-year cycle in gold may shorten, because it should correspond with a top in this advancing phase of this 3-year cycle in the dollar. But the dollar is in my opinion anyway, it's in a secular bear market. So let me widen this chart. All right, so I think this was the top of the bull market in the dollar. I think it started a secular bear market. You can see this 3-year cycle was not able to make a higher high. And I don't think this 3-year cycle here will either. I don't think it'll even come close. And like I said, I think it's going to top somewhere between the early 22 to maybe out in the summer of 22. And then at that point, I think that's when the metals bottom, finish their 8-year cycle low, and then we get the advancing phase of the next 8-year cycle as the secular bear market in the dollar starts to accelerate, and we probably come down and test these all-time lows back in I believe it was 2008, and probably break those lows. And that's when we should get our bubble phase in gold. But it's still several years away. Um, if we get our bottom or our top in the dollar here in 22, then the next 3 year cycle low would be due in 24. I think it's going to take at least one more 3 year cycle in the dollar before we get a final top in gold. So that would be out to 2027. So we probably got 5 years before we get that bubble phase in gold. But for now, anyway, another opportunity again today to break out of this coil. Again, we're going to have to see how we close. So we had a good opportunity here that didn't pan out. So the same thing could happen here. We need to see how we close. But if we close up strongly here, then I would anticipate that we're going to get a pretty strong move over the next 3 to 5 weeks. A move that'll draw in the gold bugs. You'll see all the typical gold analysts predicting to the moon. And then gold will disappoint again as the dollar starts its next rally, and come back down, and we got to finish that 8 year cycle low, and then we can get sustainable rallies that make higher intermediate highs. Right now, these are probably counter trend rallies, and you want to play them as such. You don't want to get married to the trade. Like I said, at most 3 to 5 weeks. And then you want to get out of the way again.